Us, William Blair's Jed Dorsheimer. Jed, why you have a buy in the stock? Why?
Well, one, I think that what Elon has built and done, and kind of moving to vehicles with a lower cost basis, is and on the energy side of the business, that's something we really like. And I think that people underestimated energy. And I think, quite frankly, last night was an example of that, where 14% of revenues, 25% of profits, which showed some resilience. So everybody knows that the auto side of the business has been under pressure. I guess it's debatable. Could we have should we have pulled the plug on that from a near-term trading move? Maybe. But I think looking forward here, the energy business is operating better. Elon is stepping back from Doge to focus on Tesla, and you're getting news out of de-escalation from a tariff perspective. And if that plays out, I think Tesla has more upside than downside.
Yeah, I noticed from your coverage list, it's not a surprise you might be focused on the energy business, given you do focus on a lot of those companies in that general industry. We haven't talked that much about it. Obviously, a lot of the enthusiasm seems to be around robots and auto and robot taxis as well. What are your expectations for energy then as a percentage overall? Will it continue to increase in terms of the overall percentage of profits of the company?
Sure. I mean, listen, it does have tariff exposure. So that is a vulnerability here. But if you do get a de-escalation, we have said that the return on invested capital of Tesla's energy business is better than any of their other businesses from our perspective. And I think we're seeing that bear fruit. Our analysis revealed that the need for mega packs and battery storage is far greater than most expect, largely because the variability that renewables have pushed onto the grid, both domestically and abroad, has created a lot of problems. And so to fix some of those problems, you will see a need for more battery storage. So we're very bullish on that. In fact, I'm out here on the West Coast at an energy conference with a lot of policymakers here. And, hopefully, we'll see. But I think what you're probably seeing is some capitulation off of a bottom. The resilience, might even see some short covering that's driving this. But I think the resilience from energy is definitely the highlight.
Yeah, it would certainly seem to be an important component of the overall earnings picture. As for Musk coming back, I mean, you see it clearly as a positive in terms of his focus?
Yeah, I mean, that being said, there's brand damage. And so, we have to see how, I think this puts the auto side squarely focused on robotaxi and the launch of that. And that increases the risk profile. We're disappointed, quite frankly, to see that there is no Model 2. We were, quite hopeful that would fill a nice gap for the auto to complement what we like on, the energy side of the business. And so, if Elon can come back and help with that focus, then that's going to be a positive, and we'll see if this brand can return.
Yeah, and real quick on tariffs, you mentioned the impact perhaps on energy. And listen, even though they source a lot domestically and obviously manufacture domestically, what do you think the impact will overall be of tariffs on both autos and energy?
Oh, for the energy side of their business, it would be a clear negative. If you continue at this rate, that business will see the profitability hit. So that is a risk. So, we're clearly in the camp of we're monitoring. If Besant's comments bear fruit and we see some de-escalation, that is a driver. But if it stays at status quo, that is a negative.
Okay. Jed, appreciate your time. Thank you.
No problem. Thank you.